Today's week ahead is going to be divided into three segments. The first segment talks about the bigger picture. The second segment talks about what do we do when we come back and the market opens on Tuesday. And the third section is going to be an introduction to the primer that we are going to have for those that want to be introduced to what we do from August 2nd through the 10th. When you look at the first graphic in front of you, the daily bar, you will see that there was two substantial buying periods at the 50-day simple moving average. It is highly unlikely that that buying took place by the longer term money. The odds favor that being systematic hedge fund buying. Everybody plays games in the markets. The systematic hedge fund, if they can get the market up high enough, they can trigger the pain trade. Most market participants have been able to figure out that the longer term money is either underinvested or invested in assets that are too conservative. The best information I have is the longer term money has been waiting for a pullback so they could enter the market. And of course, they haven't gotten that pullback. Some later indications I got last week is it's starting to work, that some of the longer term funds are picking up particularly growth stocks in order to show some, later participation in this market. Additionally, you saw last week that, Goldman Sachs raised their estimate by 500 points for the year. Several of the bears threw in the towel, as well as several of those talking about recession, now questioning the recession. This is a very big push and pull activity going on in the market. Now, this battle's going on. Let's take a look at last week's profiles and see what we do to monitor a continuation as we begin trading on Tuesday. The week leading up to the FOMC meeting is, what we call the quiet period. And the members of the FOMC, are not present. The meeting's over. Starting on Tuesday, we'll hear from John Williams, who's the New York Fed president. Of course, on Tuesday and Wednesday, Chairman Powell will be speaking first to the House and finally to the Senate on Thursday. It could get very interesting. If you look at the profile in front of you, there is an excess high from Friday. Now, we don't know if that excess high is going to last or not. If it does, then we have a short-term, at least a short-term high on the market. If it doesn't, then we have continued upside continuation on the market. The around the 49.59 level showed substantial, I think that's the number, showed substantial buying last Thursday and as well as overnight on Thursday. They got through there late on Friday, took out a few stops. But I think the first thing I'm looking at is that that level from 615. If we trade below that level from 615, that increases the odds that the excess high from Friday will remain, and it then triggers the re-entry into the two-day balance that you see marked on the profiles. So I don't know what the outcome is. I don't have any bias, but I do know how to look and monitor a market for continuation. And I think that's what's important. So as we start next week, we want to see, does the excess high from Friday hold? Can we trade back down below that key level from Thursday afternoon? And can we re-enter the two-day balance? If that happens, then we've got at least a short-term correction underway. If that doesn't happen, then the market continues its move to the upside. The last thing I want to talk about is a couple of times a year, we conduct a primer. A primer is a low-cost way for people to be introduced to the market profile and introduced to how we look at market-generated information. It's a 7-day course. The first half of the course is linear, and the second half of the course, we tune in and get a feel for the markets and how this market-generated information works in real life. I hope you'll come to our website, take a look at the details for the primer, and consider joining us in August. Thank you.